Imagine a country that has been through hyperinflation, booming exports, and radical policy shifts, all in the span of a few decades. That country is Argentina, often called the world's greatest financial laboratory. Today, we are diving into the real truth about its economy with simple facts and clear insights. Let us get started. Chapter 1. Why Argentina is the ultimate economic lab. Argentina's economy has tested almost every idea out there, from populist spending in the mid-20th century to strict neoliberal reforms in the 1990s, and now libertarian redesign under President Javier Milei. This makes it a lab because its ups and downs teach global lessons on inflation, debt, and growth. Back in the early 1900s, Argentina was one of the richest nations, thanks to agriculture and trade. But political instability and bad policies led to cycles of crisis. The 1970s saw military rule with heavy borrowing ending in the 1980s, hyperinflation, and prices rose over 3,000% in 1989 alone. Then came the 1990s convertibility plan, pegging the peso to the dollar, which stabilized things, but caused a massive crash in 2001 with default on $100 billion in debt. Post-2001, left-leaning governments under the Kirchners boosted spending, leading to growth, but also inflation. By 2019, under Macri's center-right rule, more IMF bailouts came, but problems persisted. These experiments show how overborrowing, currency mismatches, and political flips harm stability. As of 2026, Argentina is Latin America's third-largest economy, with a GDP of around $632 billion. It is rich in resources like soy, beef, lithium, and shale gas, which could boost exports to $15 to $20 billion yearly. Chapter 2. The Milei era begins. When Javier Milei took office in December 2023, Argentina faced chaos, annual inflation at 211%, poverty over 40%, and depleted reserves. Milei, a self-described anarcho-capitalist, promised a chainsaw to cut government waste. His first moves: slash public spending by dividing ministries and laying off thousands of workers. He ended inflationary money printing and deregulated markets. In 2024, he got IMF support to build reserves. Results were quick but painful. The economy shrank early on due to cuts, but rebounded. By 2025, GDP grew 4.5%, among the highest in Latin America. Inflation dropped from 211% in 2023 to 31.5% in 2025, the lowest in 8 years. Monthly inflation fell to about 2% by late 2025. Milei achieved Argentina's first fiscal surplus in 16 years, 1.8% of GDP in 2024. This meant no more printing money to cover deficits. Poverty fell to around 31.6% by mid-2025, and unemployment hovered near 6.6%. In the 2025 midterms, Milei's party doubled its congressional seats, giving him more power for reforms like labor and tax changes. Chapter 3. Current economic snapshot in 2026. As of January 2026, Argentina's economy shows a mix of recovery and fragility. The IMF and other forecasts predict GDP growth of around 4% for 2026, following 4.5% in 2025, overtaking the global average of 3.3%. However, some projections vary. The OECD sees 3%, while Trading Economics estimates 2.7% by year-end. Growth is driven by investment in exports, but November 2025 data showed a 0.3% year-on-year contraction, the first dip in 2025, due to post-midterm market sell-offs. Inflation continues to cool, but remains high. Annual inflation is projected at 16.4 to 25% for 2026, down from 31.5% in 2025. The central bank has cut interest rates significantly since 2023, boosting credit access. Unemployment stands at about 6.6 to 7.4%, up slightly from 2023's 6.1% due to early job cuts, but stable amid recovery. Trade is a bright spot. A record $18.9 billion surplus in 2024 reversed past deficits thanks to agriculture, energy, and mining exports. China takes 7.5% of exports, and lithium positions Argentina in the green energy boom. Vaca Muerta shale gas adds potential $15 to $20 billion in annual exports. The peso has strengthened, but interventions to stabilize it drain reserves further. Chapter 4. Impacts of Reforms. Milei's policies have transformed Argentina. Wins include rapid disinflation. Monthly inflation dropped from 25.5% in December 2023 to 1.9% by July 2025, thanks to fiscal discipline and no money printing. The first budget surplus. In over a decade, stabilized finances. Growth rebounded. After a 3.4% contraction in H1 2024, GDP expanded 5.8%. In Q1 2025, driven by private investment and consumption recovery, poverty peaked at 52.9 to 55% in early 2024, but fell to 31.6% by mid-2025 as wages recovered 15.4% in May 2025. Inequality narrowed after an initial spike, and exports rose, improving the trade balance by 71.2%. Deregulation opened markets, attracting investment. A $20 billion IMF package and a U.S. currency swap in 2025 aided reserves and debt payments. But trade-offs are stark. Consumption dropped 10.2 to 20% in 2024 to 2025, hitting staples like beef. Subsidies cuts raised healthcare and pension costs, dismantling social programs. Industries closed, leading to deindustrialization, and household debt rose. While public debt fell 12%, the strong peso sometimes hurts exporters. Overall, reforms show restraint can curb inflation fast, but balancing social pain is key. Chapter 5. Challenges on the horizon. Despite gains, 2026 brings significant risks that could derail progress. Debt repayments are a major hurdle, totaling nearly $20 billion for the year, including $5 billion in principal and $3 billion in interest. With usable reserves at just $10 billion, default fears are rising without additional aid or market access. The IMF has warned that reserves could hit critical or negative levels by mid-2026, urging faster rebuilding. The government's ongoing sales of dollars to stabilize the peso are further draining these reserves. A potential 10 to 15% peso devaluation has been discussed to ease pressure, but it risks reigniting inflation. Inflation, while declining, persists as a stubborn issue. Monthly rates hovered at 2 to 3% in late 2025, driven by rises in food, transport, and utility prices, making everyday costs high for families. Dollarization remains a debated option, but experts warn it could introduce new risks without sufficient reserves. Banks also face reserve shortages, prolonging debt resolution challenges. Social and political hurdles compound these economic woes. Public discontent is high, with surveys showing dissatisfaction over austerity measures, leading to persistent protests in Buenos Aires and other cities. Wages and purchasing power remain low. Poverty stands at 31.6%, and growth is uneven, with limited job creation in key sectors like industry and commerce. Milei's party lacks a congressional majority, requiring coalitions for deeper reforms amid rising tensions. The removal of subsidies has hit vulnerable populations hardest, and without addressing these social costs, support could erode. External factors add uncertainty. Global economic slowdowns or declines in commodity prices could significantly reduce exports, which rely heavily on agriculture and mining. Opportunities in energy and mining, such as Vaca Muerta and lithium, offer hope, but structural issues, including deindustrialization and uneven sectoral growth, must be addressed for sustainable progress. Chapter 6. Lessons from Argentina's Lab for the World. Argentina's economic journey provides profound lessons for policymakers worldwide, highlighting both pitfalls and pathways to stability. First and foremost, chronic financial deficits, fueled by overspending and money printing, inevitably lead to hyperinflation. Milei's achievement of a monetary surplus in 2024 demonstrates that strict austerity and ending monetary financing can rapidly curb inflation, but it comes at a high social cost. underscoring the need for balanced approaches that include safety nets. Second, rigid currency policies, like the 1990s dollar peg, can provide short-term stability but lead to catastrophic crashes if not flexible enough to handle external shocks or internal imbalances. Third, over-reliance on commodity exports exposes economies to volatile global prices and expanding boom-bust cycles. Argentina's dependence on soy and beef illustrates why diversification into sectors like tech, manufacturing, and renewables is crucial for resilience. Fourth, political instability and frequent ideological shifts between left and right governments worsen economic volatility as policy reversals erode investor confidence and long-term planning, building cross-party consensus on core reforms as Milei attempts through congressional alliances is key to sustained progress. Additionally, the social dimension teaches that economic fixes, ignoring inequality, can fuel unrest, poverty spikes, and protests. Finally, international support, like the US currency swap, shows how geopolitical alliances can provide breathing room, but self-reliance through reserve building is essential. Argentina proves economics is not theoretical. Real-world experiments reveal that while bold changes work, they require political savvy and social equity to endure. Chapter 7. Hope or more experiments. In 2026, Argentina's outlook is cautiously positive, with 3 to 4% growth, falling inflation, and reforms taking hold. If Milei builds reserves and eases social impacts, it could break the cycle. But debt deadlines and political hurdles test this. Argentina remains a lab, showing economics is not one size fits all. Stay tuned, it's story that evolves. Thanks for watching. If you like this, subscribe. For more global economy truths, drop comments below.